Welcome to Matters Financial and Geopolitical from a Frontier. Thank you for stopping by. I'm always grateful. Let me start with some macro thoughts today. This was a chart that was tweeted by Jamie at Reuters. Continuous downgrades to global GDP growth forecasts. And it's a pretty interesting image. And we continue to be trundling along at the bottom, I think, globally is the way I look at it. If this material works well, I'm going to use it at Goldman Sachs next year, earn me some serious tuppence, so said President Obama at the White House Correspondents' Dinner. And I was just using that to say that earning tuppence in the markets is always a 24-hour job. But earning serious tuppence is not going to be an issue for the president when he leaves office. And then I like this photograph of President Obama speaking with Vice President Joe Biden in the Oval Office, and this was from via The Intercept. Home Thoughts, David Yarrow, fantastic photography in the wild. The rhino's unique facial features are not well documented for obvious reasons of human safety. And then I went to Charles Baudelaire. The beautiful is always bizarre. This one, which I hope it doesn't get me into trouble with the missus. There are women who inspire you with the desire to conquer them and to take your pleasure of them, but this one fills you only with the desire to die slowly beneath her gaze. Two more: extract the eternal from the ephemeral. And this final one, I should like the fields tinged with red, the rivers yellow, and the trees painted blue. Nature has no imagination. It's been some unbelievable day and evening and year. This is Donald Trump in his victory appearance. Never have been through anything like this, but it's a beautiful thing to watch and a beautiful thing to behold, and we're going to make America great again, he said. In the 1990s, I once spent an evening with Donald Trump at Tramp. I was with a lady called Cosima von Bülow and a friend of mine called Lynn Menuhin, and we spent the evening with him, and he was very charming, I must admit. Very charming towards Cosima, who's a very attractive lady. As I said, I think he is one terrorist attack away from the presidency. Put up a link to Tramp if you care to have a look. They've got a great photograph there of Peter Sellers. Don't like Donald Trump? You're just jealous, says Time. That's the cover from 1989. Pepe Escobar has written an interesting piece, The Calm Before the Coming Global Storm. Major turbulence seems to be the name of the game in 2016, yet the current turbulence may be interpreted as the calm before the next devastating geopolitical and financial storm. Let's review the current state of play via the dilemmas afflicting the House of Saud, the EU, BRICS members Russia, Brazil and China. That does not mean that the House of Saud will win back the trust of both the US and Russia. Deep sources keep confirming that as far as Washington and Moscow are concerned, the House of Saud is expendable. Both are really energy independent should the US want to be. Powerful Washington factions blatantly accuse Riyadh of terror. Well, it's way more complicated. While Moscow regards the House of Saud as following US orders to destroy Russia in an oil price war. Ailing on the way to dementia, King Salman and the young warrior Prince Mohammed would be finished if those famous 28 pages about 9/11 were released. And the Saudi connection is incontrovertible. What next? Regime change? A CIA coup? A trusted Saudi military CIA asset elevated to power? What's left for the House of Saud is to play for time. High up in Riyadh, the feeling is that relations with Washington won't improve while Obama is president. The next president, whether Hillary or the Donald, will be a much better deal. So plan A for now is to keep posing as essential to Washington in the war on terror. That means King Salman falling back on Mohammed bin Nayef, the Crown Prince, way more adept at it than the warrior prince, the conductor of the disastrous war on Yemen. In parallel, Turkey's Sultan Erdogan keeps advancing his play to take over oil in Iraqi Kurdistan, eventually diverting the whole supply to make Turkey energy independent. Erdogan already has the German superpower at his feet in the shape of a groveling and begging Chancellor Merkel. Were Turkey on its way to become an energy power, Merkel would prostrate herself on that Ankara palace ground non-stop. Then talking about Russia, Brazil and hybrid war, saying Russia's largest commodity exchange is actively courting international oil traders to join its emerging futures market. The goals are crystal clear: to disconnect the price-setting mechanism from the Brent oil benchmark and crucially to move away from the petrodollar. This also happens to be a key condition imposed by Beijing to the House of Saud for continuing to buy their oil, saying sophisticated hybrid war-derived techniques may have been deployed full blast against Russia and Brazil, but against China everything fizzles. This is what PEPE thinks. Yet all this is just the calm before the storm. The empire is already striking back. There's serious blood on the tracks ahead, he says. I think he's largely right. I disagree with his prognosis about China. I think the US has yet to put full blast pressure on China, and they will continue to do that. The Chinese, of course, are responding very effectively so far. I like this photograph, President Obama walking with US Secret Service agents to Air Force One at Los Angeles International Airport in LA. And then Snowden is saying in this article, inside the assassination complex, whistleblowing is not just leaking, it's an act of political resistance. And it was interesting to read his defense of what he did. Let's move on to the currency markets. Euro 114.93, and remember, it crossed 116. Dollar index back above 93. This 93 level is seriously key. We've got to keep an eye on it. Japanese yen 106.86, got up to about 107.50. Swissy 0.9558. The pound 145.38. The Aussie, where of course we have the rate cut, 0.7504. India rupee 66.545. South Korean won 11.5458, the Real 356.02, Egyptian pound 8.8839, the Rand took a hit, longer overdue, 14.6841. The yen has moved a whopping 13% since the Bank of Japan adopted negative rates. It's 13% higher, not lower. This is Jamie at Reuters. And you will recall on January the 11th, I did say one of my conviction trades for the year is to buy the yen against just about everything, I said. Dollar index back above 93, very, very key. Keep an eye on this level. If it can hold above 93, then this was a head fake and the dollar's going to resume its uptrend. If it can't, we're back underwater and we could have a sharp fall away. The issue here really is I still see a stronger yen. Euro dollar 114.95, 114.50 is the key to the euro dollar at the moment. Gold, we're back at 1283.45, pulled back from 1300 after a very strong drive up there. Let's see how we move around from here. Oil stable after 2-day decline on stalling global growth. Brent was trading at, it's now trading at 45, just above 45. WTI is above 44 at 44.27. This follows two trading sessions in which Brent fell nearly 7% and WTI nearly 5% from end April levels. Asia's big markets continue to disappoint. Japan sank further, China relapsed, and India slipped. Exports were stuck below the waterline. Local demand looks wobbly too. Crude oil, I'll put up a chart, and I think it's a big sell. You might get a little pop earlier, but I think we're going to continue seeing it run lower. Let's move on to frontier markets. I like this. This is the most remote and magical hotel on earth. Newfoundland's Fogo Island Inn offers a different kind of island getaway. Let's move on to sub-Saharan Africa. Time for a policy reset, says the IMF. Economic activity in sub-Saharan Africa has weakened markedly, but as usual with a large variation in country circumstances. Growth for the region as a whole fell to 3.5% in 2015, the lowest level in some 15 years, and is set to decelerate further this year to 3%, well below the 5 to 7% range experienced over the past decade. Oil exporters, which include Angola and Nigeria, continue to face difficult economic conditions, with growth for oil exporters as a whole forecast to slow further to 2.25% this year from 6% in 2014. At the same time, many other countries continue to register robust growth. Most oil importers are generally faring better, with growth in excess of 5% and even higher in countries such as Côte d'Ivoire, Kenya, and Senegal. In most of these countries, growth is being supported by ongoing infrastructure investments and strong private consumption. A decline in oil prices has also helped these countries, though the windfall has tended to be smaller than expected, as exposure to the decline in other commodity prices and currency depreciations have partly offset the gains in many of them. To date, policy response among most commodity exporters to the historically large terms of trade shock has genuinely been behind the curve. A year and a half into the shock, and with foreign reserves running low, financing constrained, a robust and prompt policy response is needed, urgently, to prevent a disorderly adjustment. For countries outside monetary unions, exchange rate flexibility coupled with supportive monetary policy should be the first line of defense. I wrote about this on the 8th of February, and prior to that I wrote about it as well when I said Kenya and East Africa is on the up as the rest of sub-Saharan Africa slumps. I said East Africa looks like a bright star in what increasingly looks like a darkening sub-Saharan African sky. I said of Nigeria, the biggest economy in sub-Saharan Africa will surely contract in 2016. So the curve of history from Soros skinning the Bank of England in 1992 to the Mexican peso crisis in 1994 to the Thai baht crisis in 1998 and many more too numerous to mention confirm that maintaining an artificial foreign exchange rate is a fool's errand. And eventually, this is the point the IMF was making, carries the risk that the breakdown spirals out of control and can become seriously disorderly. South Africa, I said, which is the second biggest economy in sub-Saharan Africa, will contract, albeit 0% GDP this year. The stock market in South Africa, the all share, got slammed 1.97% lower yesterday. It's up 2.4% year to date. South Africa's rand, weakened by the most in 9 weeks against the dollar, fell as much as 2.5%, the most on a closing basis since February the 26th, and the worst performance among 31 emerging market and developed nation currencies tracked by Bloomberg. I'll put up a 6-month chart of the dollar rand. You know I've been a bear forever. It got overextended, and I think it's now going to probe the downside. Egyptian EGX30 got hammered 3.11% yesterday. Not clear why, It's up 7.5% year to date. Nigerian all shares surged 3.2% yesterday, and that's all about the MSCI Frontier Index keeping Nigeria within its Frontier Index. The Ghana Stock Exchange Composite Index down 8.34% this year. Interesting piece by Nick Terse about South Sudan. The title is Donald Trump in South Sudan. There's a fever dream, schizophrenic quality to the war in South Sudan. The conflict began in an orgy of violence, then ebbed only to flare again and again. As the war has ground on, new groups have emerged, alliances have formed while others broke down, commanders switch sides, militias change allegiances. Jason Patinkin says Kenya's cartoonists are winning so hard with their South Sudan commentary. Is not wrong. A Kenyan embassy cable says Juba is more dangerous than ever. The militarization of Juba by the South Sudanese government and rebel SPLM-IO has made the capital more dangerous than at any time since the signing of the 2005 Comprehensive Peace Agreement, according to a leaked cable from the Kenyan embassy in South Sudan. Daniel Knowles, who's the Economist correspondent and someone I know here, says, I asked a politician here in Goma yesterday about Moiji Katumbi, and he said he is the Donald Trump of the Congo. Interesting comment. Coming to Kenya, Kenya's economy grew by 5.6% last year, slightly faster than the year before. The agricultural sector, which contributes nearly a quarter of Kenya's GDP, grew 5.6% in 2015 from 3.5% the previous year. This was partly influenced by abundant rainfall characterized by the El Nino weather phenomenon. And I spoke about this on the 8th of February when I said Kenya has seen its rainfall increase as a byproduct of the El Nino phenomenon, and that's been a net gain for Kenya. On that note, what was very weak, however, was tourism. Visitors dropped 12.6% to 1.18 million during the year. And on that note, let me put up a photograph of Fort Jesus in Mombasa, and I was down there for a conference for El Mutual, and what was interesting was that there was more activity. I mean, admittedly off a very low base. The Kenya shilling strengthened to its highest level in 9 months on Tuesday. Last time I checked, we were at 100.698, and I wrote about this on the 21st of December when I spoke of the Teflon shilling and other matters, and it remains Teflon. Nairobi all shares up 0.53% year to date. It fell 0.31% yesterday. NSE 20 up 0.33% yesterday, but it remains minus 0.45% year to date. ARM has reported a full-year loss after tax of 2.89 billion. Revenue was up 7.224%, but this was all about the FX hit and higher interest charges. Although they grew EBITDA margin from 23 to 26%, they had an unrealized exchange loss of 3.7 billion shillings. They've agreed a $140 million equity investment from CDC, and they're going to apply $110 million of that to debt reduction. CDC, in my view, have made a smart trade. They can bring cheaper funding to the business in the first place. TransCentury reported a full-year loss after tax, clocking 2.422 billion. Of course, they've been in the news for all kinds of things. Revenue was actually up 15%. Not a bad outcome. Forex losses, 1.117 billion. Loss for the year, 2.42 billion. Earnings per share negative 0.09 versus negative 8.53. Group revenues were up. They're saying they had a strong performance in the engineering division, which grew revenues 9%. Power division, they're saying revenues declined 30%. They concluded in their commentary, we benefited from improved local utility order book coming towards the end of the year, which is a bright spot in our continuing effort to get more government business to go to local manufacturers, they said. They said their performance was negatively impacted by FX losses, low sales in export markets, impairment of receivables, increased depreciation due to capital expenditure. They say they've also settled with bondholders, reducing the convertible bond debt to $40 million. As part of that reduction, the group will write back the principal and interest charges amounting to $19.4 million in 2016. The outlook is positive for our core business, they said. And results are signalling a core business that remains intact. Going back to the markets yesterday, Saharan, remember they're releasing full year earnings on May the 11th. My year-end price target is $22.50. It's up 3.98% year to date, plenty of headroom. According to a report carried in the Business Daily, Chris Kirubi, who's among the top shareholders of Kenya Airways, is calling for the sacking of its top management. The report in the Business Daily says he also wants the KQ board disbanded, saying its recent decisions like selling assets at throwaway prices has reduced its operating capacity. I think Mr. Kirubi might be emitting a signal in the noise. Kenya Airways rallied 2.33% to close at 440. KCB closed unchanged at 41.50, and it's just sitting 2.35% below 2016 closing high, and will push through there in due course. It was a pleasure to visit James Mwangi at Equity Bank and meet with Mary Wangari, and we look forward to hosting James at the next Mindspeak. Standard Chartered, which had been egregiously marked down since the bonus shares were credited, rebounded 3.62%, and there's more to that rebound. EABL, we haven't spoken about that for a while. That's rallied 8.79% year to date. And that's been juiced up by the special dividend, eased back 1.01% yesterday. ARM was strong, up 5% on the CDC news. Crown Paints, which reported full year earnings yesterday, that was up 3%. Home Africa issued a notice saying they're delaying the release of their full year earnings and have received permission to do that. So plenty going on, plenty to keep up with. Do stay in touch.